Major funding for these broadcasts has been provided by grants from New York Community Bank, AmTrust Title Insurance Company, Perfect Building Maintenance, M&T Bank, Customers Bank, Marks Paneth LLP, Ariel Property Advisors, Sterling National Bank, Capital One Bank, Collins Building Services, Meridian Capital Group. Additional support has been provided by grants from AVR Realty Company, Amarant Bank, Bank of America Merrill Lynch, B6 Real Estate Advisors, Briarwood Organization, Chase Commercial Term Lending, Chase Commercial Mortgage, Citizens Bank, CPEX Real Estate Services, Douglaston Development Levine Builders, Flushing Bank, Friedman LLP, Handler Properties LLC, Handler Real Estate, Hodges Ward Elliott INC, Investors Bank, James D. Kuhn Real Estate Center at Syracuse University, Kilroy Architectural Windows, New York's Window Company, Matone Group, New Banks, Newmark Knight Frank, Optimum Window Manufacturing Corp., People's United Bank, Rockefeller Group, Rosewood Realty Services, SJP Properties, Stonehenge NYC, TD Bank, Terra CRG, the Merengoff Family Foundation, and these friends. Everybody wants the part of this apple. They really want to be in this apple. They think that this is the greatest opportunity to be in the Big Apple. So today I've assembled 4 bankers who are all entering this regional New York City Big Apple market. And we're going to find out why they're here and what they're planning to do and where they see the opportunities and expansion in the banking world today. My guest from New Jersey, Peter Micheletti, who is the Senior Vice President, Executive Vice President, and Chief Operating Officer of SB1 Bank, who's currently headquartered in Rockaway, but who's going to be moving to Paramus, New Jersey. From Pennsylvania, not really, but the bank headquartered in Pennsylvania, David Dinnan, who is the Senior Vice President, Retail Market Manager for Republic Bank. Originally Toms River, now Red Bank, New Jersey. Dan Harris, who's the Regional President for Ocean First Bank. And directly from New York City, Eugene Kennedy, who's the Executive Vice President and New York Market Manager at Customers Bank. Mr. New Jersey Banker, you've been many years with a bank. You sold it to Sussex Bank, which was called SB1 right now. What do you see as the greatest opportunities here?
It's growth and opportunity. We had a relationship with some people that had good relationships in the Astoria area, and that's where it started. Building a banking center there based on our relationships. We try to find our talent first and then move into markets instead of opening a location.
If you had to identify, and I'm going to ask each one of your banks to say, what is the bank that you're with, and what are the growth areas? Where do you see the opportunities, and why you see this?
SB1 Bank is about, like I just said, $2 billion, 18 branches, soon to be 19. We focus on customer relationships, net growth.
What do you like and what do you dislike?
I love C&I lending, commercial real estate, and construction, but we base everything mostly on relationships.
How high of a loan could you?
Our legal lending limit's currently about $28 million.
Okay. David, let's talk about the boys from Pennsylvania, the guys from Philadelphia.
Sure.
Ben Franklin country.
Right. Republic Bank out of Philadelphia coming to the Big Apple and bringing the power of red back to New York. So we're coming back with our stores. Our goal is to create incredible customer service. We've got free checking, we've got free coin counting, we've got 7-day-a-week banking.
Still have the biscuits for the dogs?
We are very pet friendly. Bring your dogs into the branches anytime.
Dan, so how the Toms River Bank, okay, which is the Red Bank, last couple of years made 5 acquisitions, including Sun Bank over there from New Jersey, and to the New York market.
Ocean First is a great story. I just joined them recently. Chris Marr, who runs the bank, knows the New York market. He was at Diamond Williamsburg with me years ago. They've gone from $2.5 billion to $8 billion in the last 4.5 years. The focus now is organic growth. So we're opening loan production offices in Philadelphia. I'm heading up a loan production office and deposit gathering office here in New York to get into these great markets. You know, New York is such a tremendous market. It's so large and there's room for competition that, you know, we want a nice consistent loan growth for our organic growth, so that's why we're here.
Gene?
Well, you know, we've been here a little bit longer. You know, we've been in the city for 6 years now, but even before that, we were doing business in New York through our commercial real estate business. But, you know, we still feel like we're scratching the surface. I mean, it's just such a tremendous market.
So when you come to New York, how do you get good employees? How do you go out and hire the team that you need over there when you have a lot of competition? Because over the last 10 years, you know, we used to have Herald and we had Bank United come over here, and then you have Signature, who's 18 years old over here, and then you have Sterling, because it's basically a new bank, which is about 5 years old. And then you have a variety of small banks out like Gold Coast and Long Island and certain other small banks. How do you go out there and find the right people to blend into your operation? Dan, you're the newest kid right now.
I'm in the process of doing that now, and it's a challenge. You reach out to your network, you reach out to people you know and you like, and you either try to recruit them or talk to them about people that you might want to interview and recruit. You, of course, market that you're looking and see what comes in that way, but it's really, you know, using your network and your contacts to help find people to bring on board. It's a challenge.
And you?
I think it's networking. I've been in the market for over 30 years. It's staying in touch with customers. It's actually reaching out to your customers as to who they may be banking with now and who they like. But we've had a great opportunity to bring people on board from the competition. They're looking for the new model in the city, and they know the model. So we've had a great influx of people coming to us wanting to look at opportunities at Republic Bank.
Peter?
And we believe that, you know, our current employees should have a network and the ability to bring in good talent as well. And people should want to work for us and want to work for their boss, you know, their direct boss.
Similar in that a lot of our best hires have been through relationships we have, just like some of our best clients are relationships we've had. But, you know, I think we sell the single point of contact model where we allow folks to bring in.
So you're approaching the single contact model, okay? You were saying before you're more technology oriented, right?
Technology and the branch side of it, but again, it's personal relationships, and
Right.
relationship trumps everything in our bank.
David, where do you see the majority? Do you see your business, the old, you know, model that Vernon had over the old commerce model was heavy retail,
Right.
okay? Heavy retail is good because you can bring in deposits, but in order to grow, you need to do loans.
Correct.
How do you compete with the existing lenders who are out there as new kids on the block? With the other caveat that you have to say to yourself, people say, oh, I remember another bank coming in, another one over here. So people say, how long are you going to be? What makes you different? And why should I change banks? Because it's difficult, you know, certain people, it's easy, but it's sometimes difficult to get companies, especially nonprofits. You know, you have to get the board to approve. There's always a process. How do you sell a customer to say, I want to try the new kid in town? I like the kid from Spring Lake.
We base our mentality on customer referrals. We don't do a whole lot of paper print advertising, things of that nature. We have our website and our social media things, but we prime it on, if you can refer another customer, that's the best referral.
Right.
business.
Now,
So if we
what
make
I
somebody
did
happy-
notice on your website, which, I was talking to Gene about and others, is that you are advocating, you have pictures of all your board members and you also have pictures of your advisory board. Okay? What do you think about the involvement of your board members and your advisory board members, or if you have an advisory board, to help you grow a business? David?
I think it's critical. I think everyone is out there developing business, networking, and looking for relationships. And I think building the right team on the C&I and the CRE side is critical. Our goal is to drive business into the stores that we open. That's more of the retail business, but we feel out of that we can get a lot of the small business. We can go after a lot of the SBA lending that's out there, and we feel there's a real need for that in the market.
Dan?
In the New York market, I think you develop relationships that you don't already have through good execution. So the focus we're going to have, and we do have in New Jersey, of course, is bringing the advisory group in, but being able to execute and be able to respond quickly. You know, on the lending side, that's what they want, that's what they need, and that's what you have to do. You can't prolong things. You have to know what's within your box and be able to execute on it quickly. If you do that, you'll be able to develop business relatively fast.
Gene?
Yeah, we have an awesome, very engaged board, advisory board as well. I mean, just this week, a couple of opportunities have come out through those relationships. So we just look at it as an extension of what we're doing, what our folks on the ground are doing.
One item that we discussed prior to the show is the difficulties, you know, when kids are graduating college, okay, that new generation over there, they're saying the Z generation is saying, hey, I don't want to be a banker. Okay, you know, it's a different world. Dan, you were an attorney at one time. You know, they're different where you were an accountant. You know, it's not sexy. So how do you get that next generation of kids who are graduating college or thinking about this?
I think the key is technology, and I think investing in technology, whether it's mobile banking, whether it's online banking, whether it's the speed of processing a loan, whether it's how you apply for a loan or how you open an account. And I think that's how you attract some folks to get interested in banking. And they may want to be on the lending side, but I think it's about service and it's about combining the technology that's out there that you get those folks interested.
So where are you going to focus your business?
Greater New York area.
And in what aspects? Are you going to, you know, a lot of people like rent-regulated multifamily, which is the New York Community Bank model over there. The biggest problem today on that is the potential legislation in the state, which may have an effect on has had on investment sales.
Right.
Then there's construction lending, you know, which is another area that people say, which is a good market with the exception of condominium market today because it's a little weak over there. And then also people say, when's the next recession? Where do you see the opportunities for your growth?
Continuing to focus on CRE and C&I lending, just, you know, good, strong relationship lending, and we haven't sacrificed our underwriting standards for any of the growth that we've done, and we're still seeing a lot of success.
Who do you believe is your major competition when you're coming into the New York market? Gene?
Yeah, we were sort of talking about this a little bit before. I mean, it's everyone. I mean, on smaller deals, it may be one group of bank. On bigger deals, it's something else. If it's in this industry, and I mean, part of this conversation is new banks coming into this market who historically have not been there. So it's diverse competition.
I mean, besides the banks coming in, recently there was a credit union called Progressive Credit Union who had a heavy concentration in taxi loans. A few people are aware that in January of this year, the credit union was acquired by the Pentagon Federal Credit Union. And credit unions have a different business. As Dan and I have known, Bethpage Federal Credit Union is very aggressive. They changed their mantra that they're an open credit union and you don't have to be in an industry anymore. So you see, in addition to the banks that are your competition, you have credit unions. And then you have, in addition, not really for the banking venues, but in certain aspects, you have the private equity companies who are lending, you know, the Goldman Sachs or others who are lending at a certain market.
It's competitive everywhere, you know. And this market is vast. I've researched, we have, you know, 566 million square feet of office with an 8% vacancy, 50 million square feet of retail with a 4% vacancy, you know, 2 million apartments, 1 million are rent regulated with almost a 0% vacancy. It's the best market to be in. So that's the starting point, and that's probably why we're all here. It's large, it's stable, it can handle the ups and the downs of the market. Competition-wise, each of us have our own little flavor of things we like to do, our own pricing models, our prepayment setups. So the trick is to find that market that works well with what you're comfortable with. At Ocean First, we have a mix of properties. We have some C&I lending, we do some construction lending, we do some vanilla multifamily cash flow, office retail. We do a little bit of everything, so we're not scripted to one particular asset class, but within an asset class there's certain things we like more than others. So, you know, we each have our flavor, so that whittles down the competition to a few banks per deal.
Now, I noticed on the SB1 website, you're also in the insurance service business,
Yes,
okay? Valley had an insurance company, an insurance brokerage business, which was basically dormant for 10 years, and now they've grown over there. Do you see that as an area of growth, cross-selling through the insurance business, the property and casualty?
For us, it works so well because the insurance works with the lenders and with our business development people to meet together with customers. So, it's not required of everybody to do it, but everybody works so well together that it just is an easy solution for our business customers and even consumers. It's a great fit together, and it's attributed to the guy who runs our insurance agency, George Lister. It was fantastic.
In order for you to get your bankers who work for you over there, how do you incentivize them to say, sell the insurance guy? How do you, bring the investment management guy on, or bring in, or the other services? How do you keep that banker happy to get him or her to be working for you at full efficiency?
Again, we find with the insurance refers business to us, and they have just as many, they give us just as many leads on commercial real estate loans or C&I loans as we give them on the insurance side of it. So it works both ways, and when all the people work together, it's a tremendous fit.
David?
I think it's finding the right people that want to be out there and sell and develop relationships. I think it's salary based and then it's bonus based. But I think people in our model are motivated by building the business, by building the store deposits.
Speaking of that, so you're opening up 3 stores basically. Before the summer, you should have 3 locations in Manhattan.
We'll have one by the end of June. We'll have a second one shortly thereafter, and probably a third one in the fall. Our first one will be 14th and 5th.
Everybody loves Brooklyn today. I mean, Dan worked for many years for the Dime Savings Bank of Williamsburg. His location right now is an apartment house or a condominium in Brooklyn. A lot of people think that Brooklyn are the opportunities, the boroughs, as you know, with Astoria, which is a great opportunity. Long Island City, there's other story. Even with Amazon leaving, it's still opportunities. Do you see the banks that you're involved with growing in other areas? You were talking about Long Island, Westchester, the 4 other boroughs. What do you see?
I think there's opportunity. Our initial focus is on Manhattan, but the previous model, we were in the boroughs also. I think there's definitely opportunity.
I mean, Manhattan's great, but I think the opportunities abound in Brooklyn, Queens. I love Queens. Long Island's good, and parts of Westchester are very good. I mean, there's opportunities in all around.
How do people know or learn that SB1, that Republic Bank, that Ocean First are entering the market? How do you promote it? How do you get the word out? How do you get people to say, I want to meet with you, and so on?
We try to hire talent local in the market and make sure they're out there in the market and doing the things that, get the word out, being involved in community events.
Yeah, it's being on the ground. It's every day calling on former customers, networking, building the business that way. We've got a whole team of people that we've hired that are training in the city, and when they're not training, they're out working their book of business.
Direct network. I've been in this market for many years, and the broker relationships that we have. That's how you get your name out.
I think it's also doing deals. Just your name is on the deal getting done, and the word starts to build.
Dan brings out an interesting concept, okay? New York Community Bank is a $52 or $53 billion bank, and the majority of their business is brokered business. And it's not negative broker business. They believe that the brokers know what's happening, and they have a select group of brokers that they deal with who are going to look after them. So they basically look at the brokerage world as a means of sales force for them. What's your view of the broker business with regard to both C&I and into real estate?
We generally don't use brokers because we feel, most of the time a broker is doing a lot of things, after a 5-year loan, they're looking to do it again, 5 years from now and reset. So as I mentioned earlier, we focus on relationships, and we want the whole relationship, not just widgets. We don't count widgets. We don't want to do just deals for one-off things. So we generally source everything organically.
David?
Yeah, we do our own sourcing.
Okay, so because you're familiar with the brokerage business.
I'm a big fan of the brokerage community. Right. They control a lot of the owners in New York City, and they shop it around. It makes you sharpen your pencil, but my experience has been it's up to us as the bank to get to the underlying financials and to figure out the property ourselves. But the brokers are terrific in New York.
How about customers?
The similar experience. I mean, I think operating here, particularly in commercial real estate, multifamily, as sort of outside the brokerage network, would have been very difficult to do the business we did over the last, 5+ years without those kind of relationships.
Over the past 5 or 10 years, there have been a number of new changes in the banking world, or new products. Okay, one has been the EB-5 immigration program. Another one is there's been a larger preponderance of 1031 deposits over there. Then there's the question of payday loans in certain markets over there, and then the cryptocurrency. What's your thoughts on these different type of new products or different venues to get some business in? Certain people have looked at. I myself have a skewed eye when I hear about cryptocurrency or something like that. But certain people have gone into that. Where do you see of the unique opportunities with like blockchain and these other areas and technology? Do you see there an opportunity for you to be lending to new tech companies like the Silicon Valley Bank has been doing, or the Bank of the Internet and so on?
From my perspective, that less, more. I think I'm waiting to see how the Opportunity Zone legislation pans out. I think that's a tremendous tax advantage that could get more construction going into a lot of neighborhoods around New York City. There's tens of neighborhoods that are impacted by the Opportunity Zone legislation. I'm curious to see how it develops. There's a lot of noise in the area yet. I really haven't seen a lot of loan opportunities for it yet because it takes some time to develop those.
See, but I think you bring up a very interesting point. Under the Opportunity Zones, you have to put the money in immediately. It's available to people who've had capital gains.
You have to have capital gains.
Okay, you have capital gains, but you take the money and then you have to make an investment, and then you have to make another investment equal to the amount of the investment within 6 months or 90 days, I think. I'm not sure the exact. But that is a means of deposits, and part of what you're trying to do is the deposits over here. Have you evaluated or thought of the Opportunity Zone opportunities?
We've looked at them. We try to stick to what we're good at, which is, again, the basic banking relationships. But we do look into all these things and try to stay up on top of the cutting edge ideas.
When people come to banks, okay, I think Commerce, which is Vernon's great success that he accomplished over there, is they look at automation and technology today. With not. The millenniums don't even know what a bank is, okay? They don't go into a bank, they just, like Chase's program, they show you take an image of the check and that's the deposit. How technology oriented are your banks?
I think we have a business called Bank Mobile, which is exclusively an app-based consumer bank. So we have folks, college students, young folks in their 20s, who are exclusively banking through the app, and it's a diversification for us, and I think we feel committed to that market, to the technology behind it, that this is the future.
Dan?
Ocean First is heavily invested in technology on a retail basis. On the lending side, the benefit of technology is all of our ability to get very smart on properties through tools on the internet and subscriptions to different services that provide really good data. So you don't have to get out until you can really understand a property fairly deeply before you start negotiating a deal. That's the extent technology really helps in our world. But after running a national platform for a while, we could learn a lot and think about lending on a property that we've never been to.
What about the ATMs? Do you reverse the charges? Do you pay for the charges over there?
We're going to reverse the charges on the ATMs. So the ATMs will be free. There'll be no service charge for a Republic ATM or a competitor ATM.
Yep, we're also part of a network that does, you can use 55,000 ATMs around the country that they don't charge. So that's the main thing. And, we give everybody, if small businesses can have scanners, the mobile capture with the phones, all technology driven.
What about advertising? I mean, one of the big areas that Commerce always was when you put on the television, it's 7 o'clock, it's Commerce's or TD or so on. Are you going to be getting involved with major advertising campaigns, or is it more of the word of the mouth and the local bankers?
For us, it's word of mouth.
I think it'll be a lot of word of mouth. We're in the process of wrapping the branches that were under construction right now. And we'll look at the right venues, whether it's local advertising, local newspapers or magazines. That's how we'll do it.
Dan?
Word of mouth and probably some trade publication advertisement that's unique to the commercial real estate and lending market.
Gene?
It's been similar for us. I mean, I think we do a lot of targeted advertising, marketing to various business groups. So we'll put on a CLE event for attorneys, and bring in 40, 50 attorneys and generate knowledge about the bank that way.
And how do you look at it, each one of you? You know, a lot of business where is a means of deposits and business, but more of deposits as opposed to loans, is the non-for-profit. How do you go after the nonprofit world? Any thoughts?
I think there, in some of the other verticals we're in, again, it's bringing in folks, experienced bankers who have banked that industry previously, and use their network and their knowledge and their experience to bring the right product set if we need to augment what we have today, but to be able to really bank that particular community.
I think it's understanding the not-for-profits. There's also an incredible business in private schools in Manhattan that we've done in the past. I think it's understanding what their needs are, whether it's on the deposit side, now on the technology side, and also on the lending side.
Right. Look, I think this is the greatest apple, okay? And people want to be here. And I think the opportunities have been there, and I've seen the opportunities by a number of banks. And I'm pretty certain that all 4 banks are going to grow and only succeed in the years to come. I'd like to thank Peter, David, Dan, and Gene, and I'll see you next week.